Thank you to the Say community and the Say Foundation for sponsoring this podcast. Follow them at Say Network and Say.io. But for now, our conversation with entrepreneur, investor, and podcast host, Robert Leshner. It was a warm summer night. I was just learning about crypto. Compound Finance just launched a token. I think it was the first looped farm. Maybe there was maybe drew inspiration from somewhere else. Take me back to those days.
Yeah, well, it wasn't the first, farm in general. So a lot of the inspiration, in a lot of ways, came from looking at what other people were doing with tokens on chain in early DeFi protocols. The first one that really was an inspiration was Synthetics. I was a user of it. I knew a lot of people that were really into the economics of how their incentives work. They're basically giving out tokens for, to incentivize Uniswap liquidity pools with their tokens. And then they create a staking contract for them. And there was people that were developing amazing spreadsheets to figure out the economics of all of this and figure out payoff graphs and all of these things, And for me, that was a really interesting moment because I was like, well, this is something that is effectively using incentives to create liquidity. Not so much adoption, but liquidity in a way that it's incredibly beneficial to their ecosystem. And so, it was a lot of the inspiration for, asking the question, well, how can you drive liquidity to a different type of protocol, to a different ecosystem?
Talk to me about liquidity.
Useful.
Why is liquidity so important?
Yeah, I think it's a lot more important for a trading platform than a borrowing platform.
Okay.
In a lot of ways, a borrowing platform works similarly if there's $1 billion of assets or liquidity in it versus $5 billion of liquidity in it. The only major difference between the two is that the much larger platform will hypothetically have much more stable interest rates. But otherwise, there's not too many differences. For a trading platform, it's actually incredibly important because it determines essentially the core value proposition of the platform, which is how much can you trade with how little slippage. And a platform that has 5 times the amount of liquidity on it in a trading venue most likely has roughly 1/5 of the slippage to an end user. And therefore, it's probably about 5 times better.
You're talking about DEXs mostly.
DEXs, yeah. Doesn't have to be DEXs. It can be
could be
exchanges, pretty much any trading based platform.
SNX at the time was it was a trading platform.
It was a trading platform where in essence you were trading virtually against their entire ecosystem of token holders.
Yeah. Which didn't make sense.
Right. And so this is also why they were
Kane Crime Syndicate.
I never heard that phrase, but in a lot of ways it led to them having to experiment with incentives, right? Because it was things like, too many people are essentially going long ether, right?
Yeah.
How do we incentivize short ether to balance this out?
Yeah.
The system works, but that approach, metaphorically speaking, of a bucket shop doesn't really work.
That was the first thing I found for sure was it was Bitcoin. You deposit Bitcoin on Curve, and then you got Curve and SNX and Ren.
Yeah.
It was a triple. It was like a triple whammy. Those were the.
Yeah, that was great stuff back then.
So, but I'm surprised that you it's interesting that when I said liquidity, most people would think about just a token, but you're talking about more in general. It's
of the underlying protocol.
Yeah,
of the platform, how much liquidity is there for
the
thing that you're actually trying to create.
Yeah.
Users using the thing.
Yeah. By the way, the coffee. We got some coffee over here.
We got 2 different kinds of coffee.
2 different kinds.
Ooh, we have a cold brew in a can and a cold brew.
This is the Nitro, highly requested over here.
All right, I'm taking the Nitro.
Okay, we got to see. We're blasting off, baby. We're blasting off.
Don't take that off. Just take the top.
Oh, there's a whole way. There's a whole method. There's a method to this madness.
All right.
Okay. You see?
This is a part of the show, right?
Take the top off. We charge an ice cream.
Yeah, of course.
Have fun, guys.
Okay.
See you later.
Boom, I figured it out.
Just take the top off.
Yeah, just
In Singapore, they drink coffee out of like a bag. Have you ever seen that?
a little straw. Yeah.
L'chaim. What was I saying? Liquidity of so TVL is a meme in a bank.
Well, it's not a meme. I mean, the phrase itself I've always had gripes with, right? Because TVL, people create what gets measured and compared, right? And TVL, for going all the way back to like 2018, right? Based on DeFi Pulse creating this phrase, Scott Lewis.
He came up with TVL. I didn't know that. Okay.
Yeah. Scott Lewis came up with TVL on DeFi Pulse.
Okay.
And it made sense for the very first protocol
Okay.
that was on DeFi Pulse at the time.
Which was
MakerDAO.
Okay.
And, there's a couple ways you could analyze something like a MakerDAO, right? You could measure it based on how many DAI are created through borrowing, or you can measure it based on how much collateral was
Deposit
locked, so to speak.
Yeah.
It's not, total value deposited.
Yeah.
It's TVL. At the time, you would lock your assets and mint against them. And so TVL really sprang from these really early days with this one type of protocol. As new protocols came out, I think the measure started to make less and less sense. So, the next wave of things like a compound, the goal isn't to lock the assets there. It actually, the protocol pooled user assets, and users could borrow assets indirectly from other users. And so when the good thing happens, borrowing, it has a decrease in what appears to be TVL. Value locked inside the protocol. Locked is not good. And then when you start having other protocols like DEXs, like Uniswap, TVL almost doesn't even matter for measuring how successful is the end protocol, how successful is the user of the protocol. And so
you just said liquidity is
right, but TVL.
Okay. What's the difference between TVL and liquidity?
That's a great question.
Okay.
There's a relationship.
Okay.
Between TVL and liquidity. The more TVL, the more liquidity you'll have. But you can't just look at an arbitrary number like TVL and say, okay, there's $1 billion in Maker and $1 billion in Uniswap.
Yeah.
Which one is better, right? They're two radically different types of protocols. Right?
Well, why? Why are they so different? I mean, I guess, you have this idea of locked because you're minting something, but why is that? But just because someone is taking one more action?
Well, it's not so much the action. It's, what are you doing with the value inside the protocol, right? A super modern system like a perp platform might have almost no TVL.
Okay.
Right? But might have huge amounts of trading activity and huge amounts of volume and low amounts of slippage.
Yeah, but it has to have some collateral in it.
It might have collateral, but it might be 1/10 the TVL
of the volume.
Yeah. And so TVL is a really bad apples to apples tool to compare different types of protocols. It's maybe okay for one type of protocol. If there's 9 competitors and forks and offshoots and different takes on something, it might be fine to say okay, let's use this same somewhat faulty approach to measure all the DEXs or measure all of the borrowing protocols or measure all of the, protocols or whatever. But you really can't go across category using this measure.
Okay, that's interesting. So, okay. I always looked at it as kind of the same thing, but...
Well, a lot of people do because that was
the meme.
That was the meme circa 2018,
Right.
So much has happened in the 6 years since that it's shocking that people even still think in terms of TVL.
Well, I just think when you see a protocol, right? Because I'm looking I want my 100x gains, right?
Yeah, of course.
So I'm looking at a new L1, right? Or an L2, and I'm okay, I see a lot of liquidity flowing into this L2. I see the TVL going up. I'm assuming there's going to be more of this in the future, so I'm going to LP, or I'm gonna buy the biggest meme coin or whatever, or buy the layer, the token stuff, right? So what's the does that make sense what I just said in that case? I mean,
yes and no, right? So there's examples when this goes horribly awry.
Okay.
Do you remember when this was a long time ago?
Okay.
Solana had one developer who made protocols, and all of the protocols were deeply intertwined.
Right.
And one of the other faults of TVL that we haven't even gone into really is the fact that it double counts a lot of activity and a lot of volume, right? So if you have one protocol, that's token is then included in another protocol.
Even Maker, where you mint and then
you
buy more.
Exactly. Going back to the idea of looping, protocols sort of loop each other, and this happens on Ethereum, between Curve and Uniswap tokens and all of these things. You get into this territory of double counting. Well, back on early Solana days, there was one developer who made 11 different protocols that all sort of recursively stacked on each other. And, was responsible for something like 90% of the TVL on Solana at the time, very early days. And it was really just one dude using a fiction to create the appearance of volume and activity. And the numbers looked astonishing. And then once everyone found out that all 11 protocols were this one guy, the whole thing disintegrated.
There's just him in different outfits, CTO.
The meme of wearing the glasses and the mustache.
Exactly. Yeah. Okay. Well, that's obviously a situation where it was abused.
Oh, totally.
But
and the same thing could happen organically, right? So if you just take a new L1, you might get into a situation very early where there's a small number of users. And there's a number of intertwined protocols. Making the numbers look
DeFi Llama does try to filter out some portion of that, by the way. So, I mean,
and everyone tries to get towards the honest metrics that are.
I see. So you're saying even though if you see TVL on DeFi Llama, it's not exactly the original TVL. Even it's a new. It's because it's kind of worked, and maybe different websites will have different numbers.
The whole TVL concept to me, I think, is just outdated.
What's a good metric? What's a good metric?
I mean, honestly, for trading related things, it's purely trading volume. That would be the best metric.
Volume, but that can be faked, no?
It can be faked, but if there's fees associated with it, if there's actual activity, if the trades are actually occurring, it's probably the best metric to measure DEXs and trading platforms. If it's a borrowing protocol, it's probably the amount borrowed, right? Right. If it's a stablecoin protocol Maker / Sky, it's probably related to the amount borrowed or the amount minted / outstanding, right? It has probably very little to do with how much collateral is in the system.
Really? Why? Because people just stick it out?
Because all of the collateral isn't being utilized. Most of it's literally sitting there doing nothing.
But that's the app.
Yeah, but the purpose of the app is to borrow, right?
Okay, gotcha. Okay, interesting.
The collateral is almost like a tangent of the core action.
Okay, I have to think about that one.
Think about it. By the end of the show,
but you can't have you can't have a I don't know what that means, because you can't borrow without a collateral, right?
Well, that's true. You can. I mean, even something like Maker has tools where they can mint DAI directly to other platforms or facilitators or whatever. So that concept.
If you're the Federal Reserve, right?
If you're the Federal Reserve, yes.
Got you. So volume, that's interesting. Because they always say there's a Binance crime, or is faking the volume or whatever.
Yeah, and there have been so many situations with exchanges, especially second, third, fourth rate exchanges, trying to attract users by having on CoinMarketCap, on CoinGecko, just fake volume numbers, right?
Yeah.
And this is a long-standing tradition within the industry.
Yeah.
Because exchanges live and die by winning customers, and customers care about liquidity. And it's hard to tell the difference between real liquidity and fake liquidity. And so,
what's fake liquidity?
Well, fake liquidity is an exchange, having its own two bots, pretend to trade with each other until there's $1 billion of volume.
Okay, FTX.
But if you tried to trade $1 billion, it would have
I-
infinite slippage.
I see. Like so, like a Binance like type, like insider type
Again,
thing.
I don't know how much like fake volume there is on Binance.
I don't know
even on FTX, but it's like the really like
You're saying
low
like
tier
really, like
exchanges,
what was
all
that
fake
called?
profile.
Like those ones that were.
I mean, if you go on CoinMarketCap or CoinGecko and you go to list of exchanges,
Blitzilago or whatever.
there's hundreds you've never heard of. Hundreds. You've never heard of. Yeah.
Hubble or something.
Yeah.
Okay. So, but you think in general, like in a reputable, like on chain, it's going to be expensive to do that.
On chain is much more expensive because you actually have to use a block space, right,
Mhm.
to get that done. If you have a exchange, you can just pretend $1 billion of trades just occurred.
Yeah.
And report that to data services.
Yeah, but I feel like on Solana though, I've looked at so many shit coins that are always like, whoa, this is doing 10 million in volume, like, and it's like whatever, 500,000 in market cap, but like, I feel like must be some, like they buy the supply, they blah blah blah, blah, you know what I mean?
Yeah, there's probably some of that for sure.
Yeah.
At least on chain, sleuths can piece together what's actually happening.
Yeah.
On a transaction level basis and a user level basis.
Yeah.
And, be able to explain what's happening there.
Yeah.
In a way you couldn't with some junk tier exchange offshore, just making up numbers.
Yeah, of course. So taking back to the Compound days, early days, I think I took you off track. You were talking a little bit about what the inspiration was, SNX. So what led you to like maybe even to launch? Like, were you worried about that or?
Yeah, no, it's really interesting. The idea was always that if you're going to build a protocol meant to last for a really long time, like, not weeks, not months, maybe not years, probably in decades, you need there to be as few sources of like catastrophic failure as possible. And in a lot of ways, there's situations where a protocol should have like one person or one company or one thing in charge, and others where there should be a distribution or decentralization of control for security purposes.
Okay.
And with a borrowing protocol, because there has to be some governance to it, it's not like a Uniswap where it's literally launched and then the pools operate in perpetuity with zero changes able to be made to them. A borrowing protocol has to have updates to it. It has
adding collateral,
changing
ratios.
parameters, changing ratios, changing interest rate models, changing all of these things. If one company, so to speak, has the keys to it, there's the risk that all the executives get kidnapped and hit over the head with wrenches until they give up the keys that have admin powers, right? There's always the ability, even with like a really secure company, there's always the ability to have a single point of failure that's easily attacked. And that's not fun if you're at the company in charge of an early protocol, right? To think about. And as a user, that's not fun because there's always the question of like, what if they get hit over the head with wrenches? Or what if they go rogue, And so the primary motivation was taking a system that required updates in perpetuity, right? Like it will always require updates. Most protocols will require updates in some capacity. Most things are not as pure as like Uniswap v2, where it's like no changes ever. And so knowing that there must be updates, the question becomes, how can you do this as safely as possible? And the way you do that is by distributing, call it consensus over the upgrade. You can move from a single key to, a multi-sig, but most multi-sigs are not that secure, right? We've seen countless errors in crypto about how secure are multi-sigs really. Like, how many times has there been a heist because somebody broke a multi-sig by hitting two people over the head with wrenches? Yeah, exactly. Shout out Chris Black. But like, half the time out of a 7-person multi-sig, 3 are the same person,
Yeah.
And so multi-sigs are not secure. And so how do you build a governance mechanism that spreads out the number of people required to like participate in a process to approve a change? And that was the primary motivation. And there was very little prior art or prior science on like how to build a system like this. At the time there was MakerDAO, which had governance. It was really wonky and like really hard to participate in and really hard to understand. And there was like a hat and you had to pass the hat and like there was spells and like you had to like, cast the spell. Yeah.
Really?
Yeah.
I've never heard of that.
You don't know about the hat and the spell?
I do. I'm not.
They used all this like wizard terminology, you know. But it was really complex.
Yeah.
Like really, really complex. And then there was like, you know, delegated proof of stake like systems that we saw, like some of the earliest versions of this that became the sort of like prior art for designing the compound governance system were things like Tezos, like where they had this system where you could like delegate, and this was the first like delegated, you know, really working blockchain system, where you could delegate your tokens to someone else for validation. And we said, oh wow, like what if we kind of took these two concepts and designed a system around the best pieces of it and also with like a clean whiteboard and our own ideas on best approaches to create a system where, you know, changes to a live protocol that handles hundreds of millions or billions of dollars can be proposed. And a large number of people have to come together, but most people are going to be lazy and don't actually want to participate in this themselves and want to put other people in charge of this. And how can you build a system that just works like that? And these were the ideas that went into designing the compound governance system. And at this point, it's become like the de facto way that most protocols govern. Open Zeppelin, you know, packaged the code into like the Open Zeppelin governance system. And between like the compound governance system and the Open Zeppelin one, it's been forked a bajillion times. I mean, almost every protocol that does like token voting is a copy of the compound governance token and the compound governance system in one way or another.
So you feel successful then?
Yes and no. I mean, I feel successful in that it's one of the most effective creations of open source code that's been recycled and reused by just an extensive list of projects in the space. Like, in that sense, I think it's unbelievably successful. If I could go back in time, you know, I guess 5 years now, and like thinking about this, I don't know if it would have been designed the same way. I think, you know, you've seen like almost every single project like take this approach, and in some ways, it's almost like too idealistic. In that the idea is that like the crowd of token holders want to manage a protocol. The crowd of token holders should manage a protocol. The crowd of token holders, you know, can manage a protocol. You know, we are on the side of like maximum distribution or like, you know, ability to scream if a proposal goes wrong. Like, oh, like make a system where like anybody can like, you know, freak out about a bad proposal. That was kind of like the minimization function. Whereas nowadays it's like protocols move faster when it's not like every token holder has to weigh in on every possible issue, where it's like specialized management or micromanagement of a protocol. And so the way I would probably design this today would be with the concept of like, and this is just for a borrowing protocol like a compound, would be, you know, having like, we'll call it like working groups for different facets of it. Like a working group to manage like the risk parameters and the interest rate models, and a group responsible for upgrades to the code, and like different like groups that are empowered in the code base to make
all under one token or a different token?
I don't know. But like it would be more special purposed to the protocol itself and what the protocol needs than like one token, one vote, like token holders all collectively control everything. And like we're starting to see, you know, different projects and teams like take some of these ideas in mind. But for the most part, it's still one token, one vote. Everyone, you know, it's a mayhem, and, you know, that's governance. And there's like a forum and everyone's like, you know, doing this together. And it's like, it's not that effective.
Doesn't work
for on-chain governance. Like,
yeah.
So I feel that we were incredibly successful in writing code that's been adopted. I feel like we were unsuccessful in building something that 5 years later is like the right implementation. This was in some sense a shot in the dark back in the day, based on like only one or two other working systems.
Right. Wow, very interesting. And you said, I mean, do you feel that there's any like current governance protocol that you like, you like, or?
I mean, right now most of it is junk.
Yeah. Okay.
Like I can't like point to
You
like
don't
one
like
thing.
dog with hat governance, or
I don't even know what dog with hat governance
I'm
is.
just kidding.
I thought they were going to put the dog on the
I
sphere in
know.
Las
I thought so.
Vegas. You know, clearly the governance there sucks.
They're not using Open Zeppelin.
Yeah, clearly something's gone wrong. If the dog with the hat is not on the sphere, like their governance.
Yeah, but really, no governance that you're liking. Like you,
I mean,
you know,
I don't know. I don't follow.
you don't follow.
Like it, and this sounds crazy coming from like, you know, a DeFi OG or whatever, but it's like I don't follow most protocols nowadays. Like I follow very few.
That's okay. That's not crazy. It makes sense. You got other things going on.
Yeah.
You're looking at the pre-seed.
Pre-governance.
Pre-go. You're making the governance, right?
Exactly. I'm pre-governance.
Pre-governance. Do you like AI agents?
Most AI agents kind of suck right now.
Yeah.
Like, but we're definitely at the moment where you're like, oh yeah, these are going to be incredible.
Yeah.
Give it like another year. Give it another.
I've had a few interactions that I was just like, whoa.
Yeah. Like we're on the cusp, right? Like as a society, like it's so like clearly we are for sure on the cusp.
No, like it was like what I did a video, and then someone tagged. There was this one bot, Dolos. Okay, you heard about this one?
No, I don't know Dolos.
And it's like a roasting bot, a bully.
Okay, yeah,
okay? So they're like roasted.
Dolos, find my Twitter, roast me.
There you go. And then they tagged the bot. This was like a week ago, and then the bot's like, "Put your shirt back on. No one wants to hear you yelling in the car. Like you're just seeking attention." I was like, "Wait,
yeah, you got roasted by Dolos."
I was like, "Wait, how did you know? Did you just watch the video?"
Yeah, it must. Or it just analyzed like the still of like you shirtless in a car.
I was like, "Wait, what?" I was like,
"Did it mention a machete?"
I did no. I don't think so. But I was like, wow, that was like shocking. I was like, wait, what just happened?
Yeah, no, the bots and AI agents are just getting exponentially better. And like, if you operate on the knowledge that it is exponential, and like it will continue to get better, it's only a short amount of time until it's all like spooky good.
Yeah. Well, so what are you paying attention to? What are you really into these days?
Oh, I'm into the boring stuff right now. I'm into the TradFi.
The TradFi.
Oh yeah, I'm into the
T-bills.
T-bills.
Deep in the T-bills.
I'm deep in the T-bill trenches. Deep in the middle ground between the TradFi and the crypto and the DeFi.
Okay.
You know?
Give me more. What do you mean?
Yeah, so about a year and a half ago,
okay.
I left Compound and started a new company called Superstate.
Okay.
And Superstate is really trying to fulfill a societal promise that hasn't played out, even though I thought it would have by now. So when I founded Compound back in 2017, and I was like marching up and down Sand Hill Road talking to VCs, being like, this is the future, there's going to be protocols that manage money, and everyone thought I was insane. I was like, trust me guys, like there's going to be open source code that manages assets, like it's going to be incredible. Because like eventually like all the stocks and the bonds and the currencies and the commodities and the real estate, it's all going to be on chain, you know. And I truly believe this. And I thought it was going to be something that occurred by 2018, 2019, 2020. By 2024, where it's almost 2025, very little stuff has moved on chain. And so DeFi protocols today really can only interact with the assets that are crypto native, that are probably the tokens of other DeFi protocols. Like it gets a lot of flack for being this like self-referential system.
Ouroboros.
Yeah, Ouroboros. But it might be Ouroboros, but it proved out that these protocols can work at scale extremely efficiently, right? And like they are bulletproof. Like, holy shit, like we've now seen so many exchange failures, so many CeFi failures, and so few DeFi protocol failures that warrant a hack where, you know, there was a vulnerability in the code. In terms of like functional survivability of these DeFi protocols, like they've proven themselves better than all of their CeFi friends, right? And so the world is finally ready for all the assets that haven't come on chain yet to start to come on chain so that they can be used in DeFi protocols. And this is something that, you know, fundamentally is the 100x opportunity for DeFi protocols, whether it's like a Uniswap or Aave or Maker or Compound or Curve or all the things on Solana or Sui or any new Aptos or whatever, right? When those DeFi protocols don't have to simply transact in, a list of like 20 DeFi tokens, when they can transact in like stocks and bonds and currencies and commodities and real estate and all this stuff, then suddenly those DeFi protocols can be way bigger than they are today. And so, there's a long-winded way of saying that like Superstate's goal is to take those TradFi assets and move them on chain for DeFi protocols so that DeFi protocols can do more awesome stuff.
Let's break that down a little bit. Like, so what are you starting with?
Well, we're starting with T-bills because these are the lamest asset possible.
Right. Deep in the T-bill trenches.
Yeah, deep in the T-bill trenches, right? I mean, T-bills are great because you really can't lose money in them. And most DeFi protocols in some way are built on stability, leverage, and things working as expected. And so the perfect asset for stability and like leverage and things going as expected is ideally a token that doesn't go down, right?
Mm-hmm.
T-bills really don't go down.
Just break down what a T-bill is.
Yeah, a T-bill is the United States government saying, I'm going to pay you $100 in 45 days, right? It's an obligation of the United States Treasury to pay you money. The United States Treasury has always paid money, and the risk of them not paying money in a short time frame, like 10 days, 20 days, 30 days, 40 days, 90 days, less than a year, that's a very, very, very negligible risk. And so T-bills generally refers to short-dated government debt. And the shorter duration it is, and this goes hand in hand with it not going down, is there's less interest rate risk. Interest rates can't change that much in 30 days, right? And so short duration T-bills generally don't go down because it's an obligation of the US government, which has essentially no credit risk.
Yeah.
And it's short duration enough that you're not taking on interest rate risk. If inflation picks up, it's probably not going to change interest rates in the next 15 days.
Yeah, you might lose out 0.25% for 10 days or whatever.
Exactly. For 10 days. You might...
Because it won't even be the whole time.
Correct. You might have an opportunity cost of 25 basis points for 20 days or whatever it is. And so there's very little interest rate risk.
Mm-hmm.
And
what's the rate for 30 day?
Right now, about 4.6.5%.
Okay. So how are you bringing them on chain? How does that work?
Yeah, so the exact structure that we're using, and there's a lot of different approaches. This is just like the first that we're experimenting with is, we've created an asset management company like a BlackRock or like any money manager.
Mm-hmm.
And what we do is we create funds with assets in the funds.
Mm-hmm.
Our first fund is a T-bill fund, like really boring. And we create this fund, and on the side of it, we build all the technology to create a token and track the ownership of this fund based on the token movement.
Mm-hmm.
And so whether it's moving peer-to-peer or, soon in a DeFi protocol, we can track who owns it at any given time for KYC, AML, boring requirements of fund life. And we marry this fund that holds a bunch of T-bills with a really nice token infrastructure. And together that becomes a token that generally only goes up.
Mm-hmm.
T-bills have a very small amount of risk, but when it comes to like an asset that you can make composable, it's a great asset.
Good collateral.
Great collateral.
So there's no fund structure like this right now. Okay.
Well, there's a few things that take a similar approach. So like BlackRock has a fund.
The BIDL.
There's a few others. Like in general, people are taking this idea of like using a fund as the sort of like legal wrapper to bring an asset on chain. And this works pretty well because there's, thousands of different T-bills. And so this goes back to our liquidity conversation. We haven't really seen anyone take one specific T-bill. The US government is going to pay this amount of money on this date, and the T-bill has this interest rate. And putting that on chain as a token, we're only seeing funds that bundle lots and lots and lots and lots of different T-bills.
So you want to put individual?
No, not yet.
Well, that's like how, because I feel like it would go to, I guess it would set to a certain value at then, and it would just,
It terminates.
right. It's like $100, and then after
There's a
that, it's like
maturity.
$105,
Correct.
and then it just sits there.
Correct. So we're not really seeing, and you hit the nail on the head, we're not really seeing people tokenizing like fixed duration assets that will disappear and turn back into cash. We're seeing people tokenizing evergreen assets that will be around in perpetuity, even if like some of the things it holds mature, turn into cash, and then are used to buy new assets.
Mm-hmm. So so in the fund, you're just going to be like rolling those T-bills over every whatever period.
Yeah, some of them are super short, like 7 days. Some of them are like 15 days. Some of them are
So
like,
it's a portfolio of T-bills.
it's a portfolio of T-bills. In general, they're 30 days and less.
Mm-hmm.
It's very short duration. You can actually go on the Superstate website, superstate.co/USTB,
Okay.
and see a list of all of the holdings in real time,
Okay.
real-ish time. Which T-bills, what the QSIP, that's like a name for the identifier. If you wanna look it up on Bloomberg.
Right.
And like what the exact composition is.
Mm-hmm. Nice. That's very cool. The level of transparency is cool. That's like what you need for.
That's what you need.
Yeah, that's what you need for like doing what you want to do.
It's way more transparent than most of the stablecoins have been over the last, 7 years about like what backs the stablecoin. Like, where is it?
You Tether like famously,
Mm-hmm.
but it's gonna crash. But I mean, so like for real estate, I assume you would do like a similar type thing, like.
Yeah, real estate's interesting because there's really two ways you can go. One is you could have like a real estate fund that acts more like an index. It's like, oh, we have a little bit of real estate from all over the country, little residential from everywhere. And it's like, okay, it's a real estate token.
Yeah.
Which is interesting. You could also tokenize individual property. So like there's always been ideas of like, why don't you buy a skyscraper and put it on chain as a token?
Yeah.
And like all of these things.
Mm-hmm.
Both of them are interesting approaches. But honestly, in the last like 7 years, we've seen like one or two experiments around real estate, but like very little.
Michael Arrington sold his apartment.
Yeah, that was awesome. That was super cool.
But what are you thinking? Do you have any ideas or like?
Yeah, I think in general, like where we're gonna start are probably tokens that look like an asset class, as opposed to like an esoteric one-off asset.
Yeah.
So like more like a broad real estate index.
Yeah.
Because like if like you're trying to get exposure to it as an asset class, if you want to put it in a borrowing protocol or a DEX or whatever, you don't really care about like, ooh, let me put, that skyscraper in. It's cool, but it's like more cool to say like, let me put like real estate in so I can use real estate more broadly as collateral.
Do you feel like that is the dream that you had you envision?
I mean, it's the dream I've had going back to the first days of me thinking about what can you do with smart contracts and like, can you build what we now call a DeFi protocol? And that's always been the dream, is like, how do you get the $400 trillion of like wealth that's recorded in spreadsheets, stacks of paper that sits in filing cabinets, and like move that like wealth, like all the wealth in the world, on chain, where it can move faster, it can be composable with DeFi protocols, it's programmable, it's transparent.
Yeah, because like I was just thinking about like the market cap of property and like whatever.
It's so much bigger than all of crypto.
It's trillions.
It's
hundreds of trillions. Just for
it is so much bigger than Bitcoin and all of crypto combined.
Just in Manhattan.
Yeah.
Just in Manhattan by far.
Yeah.
by 100 times. More, 1,000 times.
I would take Manhattan over Bitcoin.
It's just, but like when you think about it, you're like, okay, you have this much, each one's just like, whoa, this is like, so these numbers are huge. And like, then you look at the market cap of Bitcoin, it's like 1 trillion.
Yeah. Well, now it's like 2 trillion. Yeah.
2 trillion. Okay. But yeah, like bringing that unlocks.
Yeah. And that's when I think people will realize like what a DeFi protocol is capable of.
Mm-hmm.
Like right now, the people that are like closest to it, like the founders and developers are like, oh man, like, these things can be usable for like, not the stuff we're used to trading,
Yeah.
like the shit coins and all that stuff, but like it can be usable for everything. And that's I think going to be the aha moment, but it's not going to happen until a bunch of like TradFi assets make their way on chain.
What will happen when people are just buying up your treasury, your T-bill token, and then they collateralize, and then they take a loan, and then they buy more T-bill, and then what's going to happen then? Will you bankrupt the government?
I don't think so. The U.S. government is so incredibly large.
Uh-huh. Do
And-
people do that, by the way?
What?
Like loop T-bill, like try to leverage the
Essentially,
bill?
yeah, essentially. If the borrowing costs are below what they can
Mhm.
earn, right? So, in general, most people's borrowing costs are tied to short-term interest rates,
Mm-hmm.
and it doesn't really make sense to borrow
I get
to
you.
earn a short-term interest rate.
Unless there's a governance token.
Well, yeah, I guess so. But in general, people are like, in a very different business. And so every single bank, by the way, I'll go into like the sort of like core of what is like commercial banking.
Okay.
Most banks sort of do that in essence, where they borrow short duration
Okay.
from depositors, where they say, we're going to pay you an overnight rate. And they invest that money in longer duration assets, like mortgages that are like 30 years or 15 years or 10 years.
Yeah.
Right. And they are essentially levering up mortgages. And a lot of them are like very low risk assets that they hold, not that different from owning longer duration treasuries. And they lever up that way in what's called the maturity transformation
Okay.
of borrowing short term,
Mm.
lending long term.
Maturity transformation.
Yeah.
Okay. That's a new one for me.
Yeah. Google it when you get home.
I will. I will. Okay. Yeah. I mean, because banks, it's like fractional reserve. They have only a tiny bit on hand.
Yeah.
You can't necessarily pull out.
And they lever up their equity a lot.
Mm-hmm. Mm-hmm. So they're just as degenerate as.
Yeah, they're degenerate in a sense.
Mm-hmm.
They do have oftentimes 3 overlapping regulators that don't allow them to get too degenerate.
Okay.
They have the Fed, the FDIC, and the OCC. But, in essence, they are levering up their equity many, 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 many times and doing it in a way that they think is safe
Mm-hmm.
and that regulators think is safe.
Mm-hmm.
But they're so aggressively regulated because what they're doing at its heart is crazy dangerous. Like any degen that's levered 30x will tell you that if one thing goes
2008.
slightly wrong, if one thing goes slightly wrong, it's pandemonium.
Yeah. So what are you targeting? Do you raise it? So do you raise a round for this fund, for the T-bill fund?
So the way it works is it's open ended, so people can subscribe to it.
Okay.
Essentially minting the T-bill token,
Mm-hmm.
by putting
Deposit.
dollars or USDC in, and then they get a share of the fund as a token.
So it's also an on-ramp, off-ramp type
It
thing?
is, yeah. So most of the investors at this point are crypto native. So they're like crypto venture funds and crypto hedge funds, and like, they're institutions in the space that use both dollars and stablecoins. And so, we're hopeful that one day we can like trade stablecoins for T-bills directly, and that like, some exchange will let us do that, or some Wall Street counterparty will let us do that.
Mm.
But right now, everything at the fund level is denominated in dollars because today we can't buy T-bills with USDC.
Okay.
Maybe one day, I hope. But we basically have on-ramps and off-ramps as USD and USDC, but the fund itself can only be dollars because today you can only buy T-bills
Mm-hmm.
with cold hard American cash.
Market makers, $1 billion opportunity. Open a desk.
Yeah, exactly. Open a USDC to raw
You got a big client over here.
Yeah, exactly.
So there's no like target for the fund.
Correct. It's open-ended. So
Okay.
it can grow every single day.
Got you.
And it has been growing relatively
How
consistently.
much you got? How much TVL do you?
Oh, TVL, yes. About 100, right now it's about 150 million in the TVL front.
Okay, awesome.
Yeah.
So what's the next product? The real estate one?
So the second product that we launched about 4 months ago is what's called a cash and carry fund. So it's a little bit more risky than T-bill. So it's a little bit worse as collateral in a DeFi protocol, but it's more interesting from a yield perspective. And therefore, maybe it's more interesting in a DeFi protocol for levering it up. Is our second product, USCC, it's a cash and carry fund. What it does is it buys Bitcoin today and sells a Bitcoin forward or future at a higher price in the future. And this is a strategy that people in crypto have been doing for a really long time. It also exists in every single traditional commodities market in existence. The difference between spot prices and future prices. And oftentimes that interest rate is similar to the risk-free rate, but oftentimes it's not. And in crypto, in general, that difference between future price and spot price is way more than the risk.
Why is there a premium on the future price?
There's not enough capital in crypto.
Mm-hmm.
And so derivatives are a form of leverage.
So there's not a lot of liquidity. So
there's more people that want to buy the derivative than sell it.
Okay. So that just drives up the price?
Yeah.
So usually in traditional, there'd be a bigger market maker that could just handle the volume.
Yeah, and so funds like this are closing the gap. But
Athena is like the same type of thing.
Yeah, very similar. They're using perps, which are a little bit different, but very similar.
They're using perps and you're using futures.
Yeah.
What's the difference?
So a perpetual future is something that rolls over for most products 3 times a day, every 8 hours. It calculates interest and pays it out every 8 hours based on the premium of the perpetual future versus the spot price.
Mm-hmm.
So if the perpetual future is a little bit higher, it says, oh, the longs have to pay the shorts just a little bit. And the idea is that it will bring the perpetual futures price and the spot price closer in line. And if the funding rates get too high, people are like, oh, I can't afford this long anymore. Let me close it out. Thus, bring the price back to where it's supposed to be.
Mm-hmm. And what's a future?
A future is agreeing, so to speak, to a specific price at a future point in time.
Okay.
So with a perpetual...
So there's no funding.
There's no funding cost to it.
Mm-hmm.
There's just the price difference. So if the price of Bitcoin today is $97,000, and in December, at the end of December, it's $97,900, you say, okay, well, there's a $900 gap between the two of these. You can calculate the implied interest rate by buying the Bitcoin today and selling it at the end of the month at a higher price.
Damn, this is some deep TradFi shit over here.
Deep TradFi.
This is deep in the GBTC territory.
Well, DeFi can learn from TradFi and vice versa.
Yeah, for sure. So, okay, very cool. And do you have another product launch in mind, the next one, or?
Top secret for now.
Okay, top secret for now.
It'll be awesome.
That's cool. That's cool. And are you gonna have like a governance token, or are you gonna?
It's too early to say.
Are you thinking about implementing that work group strategy that you said?
It's too early to say. We don't know. We're just focused on.
Yeah, pleading the fifth over here.
We're building great products. That's what matters.
Got you. And I know that you also invest a lot.
I do.
Robot?
Robo is a cool name. I actually like Robo.
Okay.
Robot Ventures.
Robot Ventures. And what do you like investing in?
I like investing in really smart people as early as possible. So my partner Tarun Cheer and I, we like to invest in smart founders. Sometimes they know what they're building. Sometimes they don't know what they're building. Sometimes they have a pretty good idea of what they're building. And sometimes the ideas are a little bit amorphous and they evolve as they try things, right? We're not a firm that needs to see traction. We're not a firm that needs to see, a prototype. We're very comfortable making an investment decision and taking risk on mostly technically very sophisticated teams. And so that's what we like investing in. We don't, care about like this specific vertical within crypto or this specific type of project, or like we only do L1s or we only do L2s or we only do DeFi. It's like, no, we'll do anything. It's more based on, we don't do it. I don't think we've ever done a meme coin.
Okay. So no meme coins.
Just because we haven't had like a smart team.
A technical founder has not approached you with the meme coin yet.
Yeah, you don't need a technical founder for a meme coin. You just like go on like, pump.fun and just, press a button.
Is there any very successful projects that you're proud of?
Yeah, there's a lot of projects that we're proud of. We've invested in so many. You can find a very small partial list of them on robvc.com. But the projects that we're investors in from very early points. We have Eigenlayer, Layer Zero, Optimism, Flashbots, probably 30 others that we're like incredibly proud of.
Damn, those are some big names.
Yeah.
The biggest names in crypto.
All of them smart teams,
Mhm.
like just thinking about things from a novel perspective. And like, yeah, we might have been able to make more money in meme coins. I'll be honest. Like, sometimes the smartest people.
Tarun, maybe apply that green hair of his to meme coins.
I hope not.
No. You don't want to lose your partner.
To the meme. I don't want to lose him to the meme.
He puts in like 10K, retires on that.
Yeah, off a Tarun coin.
Yeah. And he's gone. How did you guys meet?
We met in San Francisco, like crypto scene, probably like 2018 or so.
Okay.
Where he was just like in town for a conference or something like that. And he was like, "Oh, I like what you're working on." And I was like, "I like your hair,"
Nice, awesome.
But we hit it off really early because like he's brilliant. I mean, he's like without a doubt one of the best investors on planet Earth.
Damn.
And he takes a different perspective on things. Like he comes from a Wall Street, like high frequency trading math background, not like a degen background.
Mm-hmm.
And he comes from a very technical perspective. And so, it was probably around 2020. And, he approached me and he said like, "Hey, I see that you have like a fund, Robot Ventures. Like, I'm thinking about doing a fund." And we were just like talking things over. And this was very early. I mean, Robot Ventures' first fund was like microscopic compared to the size of funds today. The first fund was 600K, right? I mean, like nothing, And he said, "Oh, I see you're like doing a venture fund. Like, I'm thinking about doing something similar." And we got to talking and we said, "Well, why don't we just do it together?" And that was how the partnership was born.
That's awesome.
Yeah.
That's awesome. And damn, 600K. So should I start a venture fund or what?
Robot Ventures Fund won 600K in 2018. That was also a different era where it was a lot harder to raise capital. And like, that fund only invested in 12 companies. But
that's a lot though.
Yeah, it was like roughly like 50K checks for like 12 companies.
Yeah.
Yeah, it's a great fund.
Yeah, worked out well.
Yeah.
That's a good time to be investing in crypto.
Great time to be investing in crypto, 2018.
Damn, wow. What made you want to start that? Just you saw the opportunities?
Yeah, what happened was, I was living in San Francisco. I was a founder of we now call it a DeFi protocol, but like DeFi wasn't a phrase yet. Yeah. Like there was like a small number of people that were exploring like what can you build with smart contracts, and like we didn't really know what to call it yet, right? And all of these people were smart. At Compound, we had a really hard time raising our first capital. Like no one wanted to invest in these crazy ideas called.
Really?
Yeah. Oh, it was like almost impossible.
Really? Wow.
Yeah. Our first fundraise was like horrible and like deeply unsuccessful.
What was it?
I think we raised like 350K.
Wow. What value?
Very low.
10 million?
Something like that.
Those guys got paid out.
So.
I hope.
Yeah. But it was hard. And so like there was founders who were like raising like rounds back in the day. And I was like, I didn't have that much savings, but I was like, oh, like I'll write you a 5K check. Like I'd love to participate.
Yeah.
Like I know what you're, doing. I know what you're going through. Like that sounds awesome. And so like I was writing a lot of 5K checks into things. And I was like, my bank account was like running on fumes. I had like almost nothing in it. And I was writing all the checks I could. And one of my friends worked in venture capital, and he was like, you could just like invest other people's money. And I was like, you can? I was like, I know you can, but like, seems like a lot of work. And like with a couple conversations, a fund came together. It was the capital came from Bain Capital Ventures before there was Bain Capital Crypto.
Okay, I don't know. I'm not familiar.
But it was another venture capital fund put up a lot of the capital.
Okay,
and that's how I got my start.
That's very cool. That's very cool. It's crazy to think like how much of a struggle? Like these days, it's like,
now it's
I'm raising
oh yeah,
$1 million, $2 million.
take 10 million. You know,
No problem.
you've never done this before. You have no idea what you're doing. Oh, take it all.
Oh man, how times have changed.
I know.
What makes someone the greatest investor on the planet?
Yeah, it's a great question. I think in Tarun's case, what makes him such a great investor is the fact that he can read people and teams very effectively. And he's able to suss out the credibility of someone as a founder from a technical perspective more accurately than anyone I know. Or like if Tarun's like, these guys are smart or these girls are smart, like let's invest in them. I'm like, okay, well, like you are correct. Like, you don't have to explain to me your process to arrive at that decision. And like when I ask, it's usually something like hilarious. It's like, oh yeah, like, we went to math camp together and like, he always whooped my ass. And like, so I know he's smart, I'm like, okay, if you whooped Tarun's ass at math camp, like,
damn, bro.
Damn. There's always a funny story like, oh yeah, we were like, backpacking through some country and like, he was working on his dissertation and, at the time, and I read the paper and I thought, incredible, and I'm like, okay.
Okay, bro. Take the money, bro.
I'm taking you at your word,
That's awesome.
But he's just like this like incredible scout for like incredibly technical talent.
Mm-hmm. And so is he doing most of the just like outbound, or how does that work?
I mean, it's not even outbound, so to speak. I mean, it's really just like at this point we're really lucky that like people sort of like know me as a DeFi founder and they know Tarun as a genius, and they're like, hey, we want to talk to you guys about what we're working on. Like, we don't have like analysts. We don't like write outbound emails, It's more like someone has a fun idea and they're like, oh, I want to get like Robert and Tarun's thoughts on it. It's like, great.
Yeah.
Like, we're happy to weigh in, given that like we've done this before and like we sort of know what's happening. We can provide you feedback.
That's awesome. That's awesome. Good place to be.
It's a good place to be. It's a lot of fun.
That's awesome. So you're working on so you got the fund. You got the other fund.
Yeah.
What else are you working on?
That's it.
That's it.
That's it. I try to keep it simple. My brain only has like
Okay.
capacity for like 2 things at a time.
Okay. What are you really into? Like, is there anything that you do, like podcasts, a book?
I do a podcast almost every week.
Okay.
I wouldn't say I'm like super into it. I like doing it. You probably like doing this. You've had a podcast for a while too. I don't really think of a podcast as a hobby though, even though, and this is the crazy thing, I'm probably more well known for my podcast now than I am for Compound or Robot Ventures. Like if I go to a conference, someone's like, oh, chopping block guy.
Mm-hmm.
And I'm like, that's how you know me? Like, you don't like know me for like the things I've built. You know me for like this podcast. Like, okay, like high fives. Like, nice to meet you, kind of thing.
That's interesting. That is crazy, actually.
Yeah, it is. It is like interesting because like I didn't expect that. Like, and like,
Yeah.
I didn't expect to be more well known off a podcast than anything.
Like, yeah, you're someone who built like billion-dollar projects, like.
But you've also been around the space for a while.
Yeah.
It's like, imagine if you're coming into the space now.
Yeah.
Right? You'd be like, never heard of that guy. Like,
No, but I think it's more that you see the clips.
Yeah.
You don't see any clips about Compound or clips about, like, you know what I mean?
T-bills, yeah.
So it's just like, yeah, well, that's like, I mean, the whole reason I got into content in the first place was like, how can I get myself out there?
Right. And like, it's surprising how effective it can be.
Yeah.
Right. Because like, especially if you like build up a loyal audience, right? And like one of the things that like we really focus on is like, and we sometimes fail at this by having like a couple episodes in a row where we kind of talk about the same thing and it gets a little boring for our audience or for us, because that's the problem with a weekly show.
Mm-hmm.
It's like,
yeah,
whatever. But like, we try to keep it interesting enough that people listen to it, for years on end.
You know what? Even if you feel like you're repeating, just repeat it, because I think that in that repetition, you will find nuance.
That's true. I mean, we spent way too long talking about meme coins. Like, I feel like we had like 9 episodes in a row.
Really?
Like over like the summer where it's like there was no other news.
Well, that's the news now.
Yeah.
That's
sadly.
That is sadly. You're sad about it?
I'm sad about that. I'm not a meme coiner. Like,
sounds like you missed out, bro.
our podcast is a bunch of big brain VCs, you know? We're not meme coin
Yeah.
people.
Yeah.
And like at a certain point, that's like all the news is like,
Yeah.
oh, this meme coin went from $0 to $2 billion in like 4 hours, and
Yeah.
got rich and started dunking on people on Twitter.
It feels like that, like, but in that, there's a huge opportunity to be like an actual thinking investor.
Right.
Like,
so that's what we like try is like, all right, it's like a thinking person's podcast. Like we have a huge listening audience of like other VCs, of policymakers in DC, of like,
wow, that's awesome, dude.
Like we have people like we in like the crypto law community. It's like we get a lot of like the wonkier types.
Yeah.
And that's cool.
Yeah, that's amazing. I mean, just establishing yourself like that, and yeah, like I said, that's why I love podcasts. Like I'm obsessed with podcasts. I listen to podcasts like every day almost.
Wait, can I tell you something crazy?
What?
That's gonna blow your mind.
Okay.
Okay. And this includes my podcast, The Chopping Block.
Okay.
In my entire life, I've listened to like 4 episodes of a podcast.
Okay.
Of any podcast. I don't listen to podcasts.
Yeah, you don't like them.
I'm not a podcast listener. Like my brain doesn't process information in like an auditory fashion.
Yeah.
It just like doesn't do it for
Yeah.
me.
Yeah.
I've never listened to The Chopping Block, my podcast. I've watched some clips on Twitter and they're amazing. But I've never listened to an episode.
I love when they put the math meme behind it.
Oh my God, that's incredible. I mean, our social media intern is great.
Oh, that was the intern. I thought that was a community member.
No. That's
No, that's awesome. That's awesome. That was so funny.
I listened to that clip 30 times.
Yeah? That was awesome.
It was incredible.
What was he talking about there? I don't remember. What was he saying?
I don't even remember.
I don't even remember.
It was so good.
But it's just like, you were just like... So, yeah. So, that's it. So what else are you excited about right now in crypto? What's the most exciting thing for you?
Yeah, I mean, the most exciting thing in crypto, I mean, honestly, like, and this is going to sound so boring.
Okay.
But in some ways, I think 5% of me is like an OG Bitcoiner at heart. Okay. The thing I'm excited about right now in crypto is the international acceleration of Bitcoin mindshare.
Mm-hmm.
Like, really, like, not just in the US, but in like a lot of other countries too. Like, I think we're starting to get to a global tipping point for Bitcoin as a credible asset. And yeah, it's a cousin of like, oh my God, we're so close to 100K right now. You know, I haven't checked my phone in a few hours. Maybe we're already there. I don't know. But I think Bitcoin's moment is here. And when Bitcoin's moment is here, indirectly, everything else in crypto's moment is also here or around the corner. And like the thing that I'm most excited about right now, honestly, is Bitcoin, its mindshare, its credibility. And I think it's going to like carve a path for so much else. I mean, it is carving a path for so much else.
It did carve a path.
It did carve a path for some, like, it's not going to stop. And, you know, we now have a incoming government in both the executive branch, the House, and the Senate that is incredibly excited about crypto. A lot of them are more focused on Bitcoin, but they are excited about crypto. And this is new. And like, we've never had a situation like this before as a society. Like, if you said even like 2 years ago, like, oh yeah, the US government is going to become pro-Bitcoin, you would have been laughed out of a room. Like 100% laughed out of the room. Anyone saying this, right? And now it's the objective reality, right? And for me, as like someone who's like focused not on the like this week, this month, this quarter, or whatever, like I don't really care about the price of crypto. Like I'm focused on like, where are we going to be in 10 years? Like the path from here over the next 10 years looks so bright. Like it's crazy. And so I'm mostly paying attention to like the macro right now. And like, I'm most excited about the macro, but like the macro is so inspiring and like creates so much optimism for me that I think it's the most important.
That's awesome. That's awesome. Came a long way from those 600K fun days.
Yeah, well,
parading around in the streets.
parading
Smart
around.
contracts.
Yeah, trust me, guys. Smart contracts will be a thing. I mean,
That's awesome.
yeah. I mean, I used to get laughed out of the room when I said like smart contracts will be able to create financial infrastructure.
Speaking of financial infrastructure, is ETH dead?
No.
Okay.
Why would ETH be dead?
I don't know. That's what everyone says.
Just because the price isn't going up as much as the price of other things that are mooning. I mean, I don't know. Like, I've also always been like, I'm not an Ethereum maximalist, but in terms of like, as a builder / developer, I have always generally been focused on Ethereum. As an investor, I'm like half focused on Ethereum, half on other stuff. Ethereum's not dead. I mean, it is still the number one blockchain for building and launching a new application, right? Does it have the volume of like trading? Like, I mean, honestly, Solana is kind of passing it due to all the meme coins and Pump.fun and like all the shit. But like in terms of like novel things getting built, it's like Solana's like, it's lagging behind there. Ethereum has still got it. Has the price of Ethereum followed? I don't know. Like it's hard to even say like what matters and what doesn't matter. Like, yes, if you're a trader / investor, like the price is all that matters, and like you really don't care about anything else. But as like a builder, like I'm still excited about Ethereum. I still think it has a really, I mean, the 5-year roadmap. I know it's going to take fucking forever, and 5 years is way too long. But like the 5-year roadmap is awesome. Like honestly, and it's like as a builder who's building products on Ethereum, it is still the number one place in my mind to build, and I am building, right? Superstate is building on Ethereum.
Yeah.
The first integrations we have are going to be on Ethereum. It's still an incredible blockchain.
Yeah. I mean, for you, a 5-year roadmap makes sense because you're in T-bills.
I'm a boring T-bill guy.
Like T-bill is still going to be around in 5 years. So.
I hope.
I think you'll be. Well, if they're not,
yeah, then we're in trouble.
Anyway, we're in a bad.
Then we're in hyper Bitcoinization, and Bitcoin is.
Then you're already
20 million per Bitcoin.
Then you already made it. So I want to talk to you also about your health and wellness.
Please.
I know you've had quite a journey.
I have.
And you look great.
Thank you.
How do you feel?
I feel pretty good.
Okay.
I have a little bit of a cold that I brought with me from New York.
Okay.
So like, I don't feel like 100%. I feel like, 91% or so right now.
Yeah.
But yeah, I mean, I'll be honest, like during COVID and like maybe the year or two before that, like I was not focused on my health. I mean, I went from being like a relatively like normal weight dude to being like larger without like realizing it. Like even at the time I wasn't like, ooh, like I'm gaining weight, like I'm getting fat. It was like, I'm just not focused on it. I'm focused on building a DeFi protocol. I'm focused on investing in founders. Like it was never something I thought about. And then one day I kind of like looked at a scale and I was like, holy shit. I was like, I need to get in shape. And I made it a mission kind of like overnight. Like I flipped the switch in my head and I was like, all right, I'm going to get in shape.
And what did you do?
It was March 1st or so when I like made this sort of like mental decision that I was going to like lose weight.
March 1st. That's like what? 8 months?
8 months? A little over 8 months now. Almost 9 months.
Okay. Not that long.
It's almost December. Yeah, it's about 9 months.
Okay.
I was like 210. Now I'm like 155.
That's huge.
Most of the weight I lost in the first 3.5 months.
Right.
I've been pretty much 155 probably since about July now.
Okay.
Give or take like, a couple pounds here or there. But I basically started small where I was like, okay, I know I need to like fix my diet and I know I need to like fix my exercise. I mean, my diet was horrific. I was eating Italian food like half my meals, drinking so much bourbon. I mean, like it was bad. Like it was like not healthy, right? But like that's like the way I've always been, It's like I'm always just gonna eat like whatever I feel like and drink whatever I feel like and like do all that. And my exercise was zero. I mean, like honestly, like I was weak as shit and I had like no stamina and like I hadn't really exercised in like, I mean, I got married like, 5 years ago. I think before the wedding, I like went to the gym for like 2 months to like lose a couple pounds. But like aside from that, I had like about 20 years of not going to the gym, right? Maybe like in aggregate 4 months of exercise in like 20 years. And so I was like, both of these are at like horrific levels right now. I have to improve. And so on the diet side, I was like, I'm going to like start with something I know I can tackle. And on the exercise side, I'm going to start with something I know I can tackle and like grow from there. So in my diet, I just cut out like the worst things in my diet. So I said, I can still eat what I want, but nothing fried, nothing processed, and nothing with sugar added. I'm just going to cut out like the really bad stuff. And then like whatever's left is fine. We're fine-ish as long as I stay away from like the worst parts. And on the exercise side, I was like, well, I literally like can barely walk up a flight of stairs. I was like, I'm going to start by walking. And I was like, I'm going to walk to and from work. And instead of like riding the subway or calling an Uber, I'm going to like, if it's a reasonable distance, I'm going to walk instead. And so, I basically just started like walking 4 miles a day and like not eating the worst parts. And then like after 2 weeks, I was like, okay, now I'm going to like up it a little bit. And like on the diet side, I was like, and now I'm not going to drink as much alcohol. I'm going to like radically scale back my alcohol consumption. And I was like, okay, and I'm going to like try to eat like a much better like overall diet. Like I'm going to like not like, I'm going to like learn what macros are and like eat like more protein and less, just like dairy and less carbs and like start to learn about this stuff and like come up with like a nice, well-rounded diet. On the exercise side, I was like, okay, now that I've like shaken the rust off a little bit, I'm going to like join a gym. And I joined the gym and I started like running and then I started like lifting a little bit of weights and then I hired a trainer and like I basically just kept on scaling up. And after like 6 weeks or so, I was at the point where I was like going to the gym 6 days a week and I was eating like really well. And I was like, okay, like I've like taken the first step. And like the first step is the hardest to like form new habits and like new like activities. But like I made it like 6 weeks in. I was like, all right, I have all new like habits. And I was like, I don't really care that like I'm not like really drinking it all anymore or like, whatever. It's like it almost became easy after like making it over like the hard part of it. And like once I got over the hard part of it, this July was my 40th birthday. I was like, okay, well now I have my 40th as like the milestone to like work towards. And I was like, okay, like if I've made it 6 weeks, I just got to make it another 3 months. It's only like twice what I've already done, I was like, so I was like, I just got to keep it up. And so like I just kept on like.
What kept you motivated?
I'm kind of like an all or nothing person. Like when I do anything, like, my wife makes fun of me for being like freakish at like my like level of focus on something once I'm like doing it, like, and that like I don't do anything I don't want to do. And like once I want to do it, it's like I'm all in. I mean, I just like once I got to the point where I like flipped the switch in my head, I was like all in on it. And I'm still like, now end of November, like still pretty much all in. Like, I'm at the point now where I can cheat a little bit. I'll have a little ice cream here and there, but like,
Yeah,
I'll have a beer every now and then,
Mm-hmm.
But like I've kept up like a pretty.
Oh wow, really strict with the no drinking.
Yeah, the rule I set for myself to like regulate this was I was like, okay, I can't drink if I've had a drink in the prior 2 weeks. But on the nights I go out, I can have as much as I want.
Oh wow, okay.
So like no more often
Like a
than
cheat
once every
meal.
2 weeks. Yeah, like a cheat meal, right? So I was like, I can have 3 drinks if I go out,
Yeah.
but then I can't do it again for 2 weeks.
All right.
But on any given night, I'm not just gonna like randomly go out. And even if I go out, I'm like, oh, if I do this, I can't do it again for 2 weeks. So like my average frequency of like drinking nights was like once every like 3 or 4 weeks, even though the rule was only every 2.
Do you talk to your portfolio companies about this kind of stuff?
A little bit. It's funny because like one of the reasons I got into this bad shape in the first place was like this like calculus, which I think is wrong, right? So the calculus I had in my head was like, I'm going to focus on being successful. And then once I'm successful, I'll have time and money and I can like focus on like my health and all of this stuff. And like, it seemed extremely logical to me where it was like, oh, I'm too busy. I got to like, go to the office and like work with the team. Like I can't like take time off to go to the gym or whatever. It's like, in reality, you can. And it was a prioritization like error because like, I think like I could have even like 5 years ago, 6 years ago, even like at my peak busyness of like building a DeFi protocol, I could have gone to the gym. I could have eaten better. I could have gotten in shape. Like in terms of the overall difficulty, like it has it would not have made things that much harder, right? And in fact, I might have been more successful if I had more energy, if I had more time in, the day for myself, if like whatever. And so there's a couple founders that I have spoken to in our portfolio, some not in our portfolio about this, that I'm like sort of like mentoring or coaching, that have been like, oh my God, I've seen on Twitter that you've lost like a ton of weight. Like I've also put on like a lot of weight through COVID or over the last 2 years. Like I'm busy, I eat like shit. Like I'm stressed out, like all of these things. And I'm like, hey, like I'm happy to like coach you a little bit on like what I've gone through. Because I had to discover this myself, too late.
Yeah. Yeah, because there's definitely that, SBF sleeping on the beanbag or whatever.
Yeah, like maniacal. And it's like, you might be more successful if you actually take time to be healthy. Like, I have more productive hours in a day now, even like taking like an hour a day to exercise, than I did before. Like, honestly, I wake up 3 hours earlier than I used to, and I go to the gym. Like, I'm like literally starting my day like post workout before and earlier than I would in the old days anyway. So it's like the only thing that's like been compromised at the other end is like I go to sleep earlier. It's like I don't, play chess on my phone until 2 in the morning. I play chess on my phone until 10:30. But like I have more sort of like productive work hours in a day now, even taking an hour plus for like myself.
Nice. That's awesome.
Yeah.
That's good. A word for everyone listening.
Exactly.
Touch grass.
Touch grass. You may as well start today. Start small, build.
On that note, I'm a young man,
How old are you?
29.
I was literally going to guess 29 if you
Okay.
like made me guess.
Should have made you guess.
Yeah, that would have been cool.
There's many 20-somethings. I personally really respect you, especially when I was just getting started in
Appreciate
crypto. I was really excited about, YFI.
Oh,
Aave,
YFI was awesome.
Compound.
Yeah, all those are awesome.
Those were the OGs for me. That's where I got started. So give me a word of advice. What would you say to someone, who wants to grow, to get better, to build businesses?
Yeah. This is my advice generally to all founders, right? And all people, like they're like doing something. The biggest obstacle is usually yourself, right? It's like fear of embarrassment or fear of failure or fear of like any number of things. You kind of have to get out there and like get in the arena, so to speak, and just do. And you're always going to be embarrassed by like version 1 of any product you build, right? Like to this day, like Superstate is my 4th company. Like to this day, version 1 of our product I was deeply embarrassed about, right? Because like it kind of was not to the standards I expected. That's okay. Like 0 to 1 is all that matters. Like getting out there and launching the thing. Just launch the thing. You will learn more launching the thing than you ever will thinking about it, talking about it, like marinating on it, like designing it. Like it's exponentially more valuable for your own like knowledge and the knowledge of others to just get it out into the world. So like whatever you want to do, just get it out into the world and like worry about like how good it is and like the ramifications of it and like whether or not you're embarrassed by it later. Just like go 0 to 1 and get something into the world.
Yeah. Can you give me an example from your journey where maybe one of your companies, or you even mentioned the product, but like...
Yeah, I mean, I'll give you a great example. I mean, at Superstate, we launched almost without a product. And what I mean by that is we launched a T-bill fund that we were like manually minting a token, like when somebody like subscribed to it for the first like couple weeks. There was no like website. There was no like product for end users. It was almost like, corresponding via email was the product. Like, okay, like please sign these investment agreement docs.
Yeah.
And then like tell us your, address for the allow list. And like there was like no like user experience there at all. Right. It was literally like an email-based experience when we first got started. And there's a lot of other like words or theories for this. Like, if you read like Paul Graham's essays and like, Y Combinator and all that stuff, it's like, start off doing things that don't scale or like getting to market quickly and all of these things. It's like, At Superstate, we launched without a website.
Mm-hmm.
Like we launched a tokenized T-bill product without a website to start. Right? There was no like experience for customers besides like you're going to get a T-bill return and the token sits in your wallet.
Yeah, and as an experienced founder, I guess you felt confident, like, this is the MVP. This is the actual...
And it's still scary, though, right? Because, like, even when you're doing it, and, like, even with, like, the knowledge of having done this in the past, you're still like, well, we want to move quick, and we want to, like, test, like, the idea, and we want to start working with clients and all this stuff, but, like, you still are, like, always a little bit scared in your mind, like, what if, like, this is the wrong way of going about this?
At the end of the day, though, the website is fluff. I mean, it's not.
Now there's a beautiful website.
Yeah.
Now there's a beautiful portal and people can click buttons.
But that's not the product.
Yeah.
I mean, maybe it is the product. Like,
it is in a lot of ways.
But, like,
the whole thing is the
product. Fees.
Yeah, the whole thing is the product.
The money, at the end of the day, you got to transfer from here to there.
Yeah.
And that's how you get started.
Yeah, 100%.
Well, leave me with something inspirational, some words of wisdom.
More words of wisdom. Okay.
No, you don't need any more.
Okay.
We've had tons of words. I know you got plenty of words.
I got words.
More of wisdom. Is this a challenge for you?
Okay, so
you're an infinite well of knowledge over here.
All right, my evergreen crypto advice.
Yeah.
To like everyone who's like, because I'm sure everyone who listens to this podcast is trading crypto and having fun and doing all sorts of shit.
Yeah.
We are basically entering a bull market.
Okay.
If that's not readily obvious to everybody. So my bull market advice, and this is like evergreen, like this doesn't go out of fashion. You must, in the back of your mind, follow these basic rules for a bull market. Okay. Number one, know when you're going to exit or cash out or like take money off the table and stick to it. Like everyone gets greedy.
Is that a portfolio size you mean?
It can be anything. Like in your head, decide like when you are going to cash money out and how much, and do it. It could be a price target. It could be like, oh, when Bitcoin is 150K, great. It could be like a price target for whatever meme coin you're trading, right? It could be a portfolio size. Write down a number and stick to it, right? It doesn't mean you have to go completely out of the market. Take 50% off, like whatever, but like have some exit in mind. And it can be a very large number, but like you will get to that very large number point in a bull market, and most people are like, it's going to keep going. And then things turn around and it's a fraction of that. So like come up with a number and stick to it. Even like if you feel like regret while you do it. And like you will feel regret. Anytime you're taking money off the table, like you will feel regret. Because like, oh my God, but it's still going to go up more. Don't. With that money you're taking off the table, make sure you're able to pay the taxes on your gains. Like a lot of people like assume that there's literally like no taxes, like there are. Like, especially if it's your first crypto market, like make sure you're setting aside money for taxes. And if you take money off the table, pay down your debt, but whatever it is, whether it's like student loans or a mortgage or like credit cards, like the first thing you should do is pay off the debt, because even if the bull market disappears and that's the end, you've like benefited tremendously. Do not take too much centralized platform risk, okay? Beyond like a Coinbase, okay? Whatever shit exchange you're trading on, it can rug you, okay? Any business that you're interacting with can go bankrupt. Like, do not leave crypto on some platform that you don't trust with your life. Because in every single market when things have turned, a lot of centralized platforms have screwed people over. And lastly, do not shill crypto to your friends and family, because this is the truth. If it goes up, they're probably not going to thank you. And if it goes down, you're never going to hear the end of it. It's really not worth it to like convince people to buy some crypto asset. Just like don't. Like it's going to bite you, whether it goes up or down. So just don't do it. And lastly, have fun and be smart and don't do anything stupid.
All right, Rob, thank you so much. On that note, I appreciate it.
Thanks for having me on the show.
I really appreciate you coming down. Like I said, I really respect you, and I appreciate the time and your knowledge and your expertise.
Appreciate it.
And yeah, let's do it again sometime.
All right. Next year in Miami.
Next year in Miami. Thanks, man.
Cool. Thanks.